Now, this is where we move on to the really fun stuff. This is the on-chain side of the equation. Now, last week, we covered the concept of a top-heavy market. Let me just rebuild what I mean by this. So what happens during all market cycles, both to the upside and the downside, is that coins change hands. Now, let's look at this on a big picture view. In a bull market, what happens? Lots and lots of old holders, long-term holders, they sell their coins, they take profits, but someone bought those coins. And what tends to happen, and I know this, I went through this is my experience back in 2017, 2018, a lot of people come in and they buy the top. And when people buy the top, they become much more sensitive to price because they've bought at a high price. And generally with the end of a bull, not only do you have the most euphoric uptrend and everyone's excited and you can't lose, lots of people buy there and then it collapses. And suddenly all those people realize, oh no, I am seriously underwater in my holdings. What do I do? So a top heavy market is essentially a zone where you've got lots of supply that is price sensitive, AKA above our current price, that was in a profit just a handful of weeks ago, but is now no longer. So at 31K, right, we had over 75% of the supply in profit. This is what we're looking at here, the percent of supply that's in profit. Now we've increased from the doom zone back here under 50% when FTX blew up, and we've gradually been getting more and more people in profit. At 31,000, right, there's only 25% of the supply that wasn't in profit. Well, what we've seen here is that we've actually fallen 12% of the supply. From memory, it's about 2.6, I think, million BTC has suddenly found itself. It was in profit last Monday. It is now in loss today. So we've seen a major shift in the amount of supply that was previously in the green that is now in the red. Now, another thing to note, just to indicate this top heaviness, the low that we printed back here. No, here's our price. We have a higher price than we did back here, but the supply and profit is a lower low. That means that even though price is higher, there's a lot more supply that was transitioned to new hands up at these higher levels, right? So for those who are really in there doing some kind of, analytical models and really breaking down this kind of this behavior, you can start to look at how much price has to move to drive more and more supply into the red or into the green, because the exact same principles apply. Here's our bottom at FTX. We traded sideways and did almost nothing, barely grinding higher. And look how quickly supply and profit started to climb. That is telling us that lots of supply has a cost basis lower. It only has to be 1 cent below and it's suddenly in profit. So these rates of change, right? When we start seeing these rates of change in supply and profit or loss, that is telling us something about the top heaviness of the market. And we cover this in the with the URPD chart. So now that we've established that there was a futures flush out, options were obviously mispriced, but what we really do have is a bit of a top heavy market in the spot space. So the next step is, how did investors react to this particular event?